What is stock reverse split? And why would the company initiate the strategy as a necessary tool? Well, stay tuned, you will get all reasonable answers in this review. Welcome to my channel. Time to subscribe. A reverse stock split is a company management strategy to consolidate the number of existing shares of stock into fewer and valuable shares, meaning the company will reduce the total numbers of outstanding shares in the open market to enhance the value of the asset class. To achieve it, the company will divide the total numbers of shares by, say, 1-for-5 or 1-for-10 reverse split. For clarity, reverse split is also known as stock rollback and should not be confused with stock split. To know more about stock split, please check my video titled Apple Stock Split. You will see it at the end of this clip. What is the effect of stock reverse split? Stock reverse split has no inherent effect on the company value or the composition of the company market capitalization, because the market value of the company remains the same despite the reverse split. However, the share price will increase again in direct proportion to the reverse stock split, and the total value of shares and investors hold remain the same. Let me break it down further. Okay, let me explain what is outstanding shares. Outstanding shares means the numbers of stock currently held by its shareholders. Going further, if a company named Blue Diamond Bank, for instance, in the UK has 20 million outstanding shares in the market, which are trading at £5 per share, let's say the company initiate and execute the 1-for-5 reverse stock split. In effect, it means the company merges 5 existing shares into 1 share. Don't forget, the company has 20 million outstanding shares. Okay, so 20 million divided by 5 equals 4 million new shares. And each share will now cost 5 multiplied by 5, £25 per share. Well, here is the key. Multiply the £5, the price of the stock, by the new outstanding shares after the reverse split, which is now 4 million. 5 multiplied by 4 million equals 20 million. Back to the original figure. Let's go further. Okay, what is the impact on this on shareholder position? Let's say you have 100 shares, so divide 100 by 5, which equals 20 shares after the reverse. However, let's say your initial 100 shares at £5 is 100 multiplied by 5, so your initial share is 500 shares. However, you should remember that the reverse split has a significant effect on the share price, which is now gone up to $20. So multiply the new share 20 by 20, which equals 500 shares. What does it mean? You say half your 500 shares value. Remember, it is the share value. In effect, what will happen as a result of this strategy is that you will lose shares from 100 to 20, though the value of your share remains the same. And if the numbers of shares you owned is small before the reverse split, say you have 10 shares, your stock will be wiped out with time if this action continues, as in the case with me with the cannabis stocks. Okay, let us examine reverse split and options. Though regular stock split has no impact on your option position, well, reverse stock split will have impact on your option trading position. Detailed explanation later in another episode. The question is, when and why should a company initiate a reverse stock split? According to the laid down rule by the exchange, for a stock to be listed, it must fulfill the exchange listing requirement, the bid price if you like. Meaning, for stock to trade effectively, the bid price must and should be above $1 in the States, for example. However, if the stock fall below the bid price and then remain lower below the $1 peg over a certain period, it is very likely that it's going to be delisted from the exchange, and such a stock will be relegated to a penny stock status, meaning it can only be traded over the counter bulletin board. And when the above scenario mentioned happens, the share becomes harder to buy or sell. A good example is the Aurora Cannabis, which sometimes in May 2020 faced being removed by the New York Stock Exchange as the share price traded below $1. Shares have been slammed in the past year, plummeting from $9 in the early 2019 to close at 69 cents. Aurora said that it will grant shareholders one share for every 12 currently outstanding, reducing the numbers of shares from more than 1.3 billion to roughly 110 million, but also issue even more stock, diluting shares more than 30% according to an analyst estimate. So what happened shortly afterwards? Shares of Canadian cannabis company Aurora Cannabis, ticker symbol ACB, took another tumble on Monday, with its stock down 65% since the start of the year, and cash burn accelerating to an annualized pace of more than 600 million over the past years. Patience seems to be draining out of investors. Well, however, not all reverse stock split result into disaster. Let us look at the positive outcome of the strategy. In mid-2003, Priceline.com did a 1-for-6 reverse stock split, lifting its stock price from around $3.50 per share to $22, as many investors believed that the William Internet Travel Service would fade away with so many other .com companies. Now, 12 years later, the stock trade above 1,200 per share, giving long-term investor a 50 bagger with room to spare. Again, Corporation of America traded as low as 60 pence per share in 2001 before reversing splitting 1-for-10. Since then, the private prison services has seen its stock jump more than tenfold, with regular split helping to drive the company total returns higher. Is reverse stock split a good strategy? Well, in my opinion, if this is the only available tool to save any company from being delisted, I say go ahead. That said, I like to refocus my lens and look at some of the companies trading below £1 in the UK, more so some of the banks. It looked to me as though for some of these companies, reverse split is inevitable. However, this is my opinion. Do your research. Okay, here comes the best part. Subscribe, like, and comment. Remember, the goal is to generate wealth, build companies, and create jobs. Bye now. See you soon.